stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A couple more top picks from a couple more of our top strategists here at Zacks, namely Research Director Shiraz Mian and Senior Equity Strategist Kevin Cook. Even though you're the research director, we'll put you in that strategist category for the sake of discussion.
Sure.
Start with you. You're talking. You're out in the oil patch talking about Chevron.
Yes, Chevron. I've liked Chevron for a while, and it's not so much that Chevron's valuation or other metrics make it stand out. It definitely doesn't stand out based on the Zacks metrics. It's a rank 3. The PEs look horrible, unconventional metrics. It's a positive, constructive view of oil, and I think the best way to play that in a safe manner is Chevron. It's as everybody knows, one of the largest oil players in the world. Has a fortress balance sheet, pays a juicy dividend exceeding 4%. It may not grow as much, the dividend, over this year and next as it has historically, but it's definitely safe. An investment-grade credit. So even if oil prices pull back somewhat more, it should hold its ground. So a safe way to play a positive outlook for the commodity, and I think the commodity picture has turned. I think we have seen the bottoms. I'm not suggesting or looking for huge gains in oil prices, but as the market comes around to have more confidence in the stability of oil prices here and going forward, there will be a big boost for Chevron and many other oil sector players too. For those folks who have relatively more tolerance for risk, I would suggest they look into the exploration and production space. Occidental Petroleum is one, PXD is another, but for safer and relatively good sleep at night, you'll get that.
Chevron's going to be around for a while.
That's right. Yeah.
All right. From oil, we go to freestanding emergency rooms, Kevin.
Yes, Adeptus Health. Very interesting little company, about $1 billion market cap, and they operate dozens of freestanding emergency rooms in Texas, Colorado, Arizona, and Louisiana. And they're growing at quite a fast clip here, and that's why it's exciting when you find a small cap with growing earnings at 30% and growing bed count in their space as they are. We bought it recently for one of my portfolios, so I want to make that known. It's a Zacks number 2 rank, and I want to go right to the price and consensus chart so we can just see where earnings have been. This stock has a 52-week high of $120, trading just above 60 now, so it's pulled back quite a bit. Let me get our detailed, let's go to the detailed estimates first, just so I can show you what the growth looks like. Now, they reported a great quarter a few weeks ago, and they just updated guidance. They had to bring down the current quarter a touch, but they raised full year guidance. So I was going, because whenever you cut the current quarter, it's usually bad. They also did a small share offering, which was not dilutive because they used Class B shares for directors. So, let's go right to the detailed EPS tables here. So you're looking at 120% EPS growth this year. And that's a high estimate actually, 269. Their guidance is 255 to 265. This analyst has come in higher. So tremendous growth for this year. It's going to slow down a little bit, only 57% EPS growth next year. So that's what you want to see in a young small cap. Now what they're doing is they have these freestanding facilities, but they're also partnering with other bigger hospitals. So they're in good standing. They're not just competing against the hospital. They have relationships with major metropolitan hospitals. Okay. And you can picture in a state like Texas, a lot of free country, and you're driving hundreds of miles. Yep. The idea of a freestanding emergency room in more of a rural area is quite appealing. So, and the reason that Adeptus was able to raise guidance for the full year is because one of their facilities is going to open sooner than they thought. It's going to open in Q4 versus Q1 of 2017. So great little company. I think everyone should take a look at. In a space that's growing fast. I want to just point out some of the institutional buyers in Q2. We had Eagle Asset Management with a new position of 640,000 shares. Everpoint Asset Management, a new position of 615,000 shares. Fidelity adding 400,000 shares. Now they hold 1.7 million. So this is the thing. They're not buying huge positions, but they're building in this small cap name.
All right. Well, thanks for that. Don't forget, if you want more stock information, stock picks, picking strategies, commentary, it's all there for you on Zacks.com. All you need to do is get over to the homepage and link to it all from there. With Shiraz and Kevin, I'm Terry Ruffalo.